What's going on YouTube? Stocks by the numbers. Welcome back. Trying to do a couple of quick update videos here, basically just to remind everyone how freaking awesome I've been doing here. Name of the company we're looking at, STEM Inc., ticker symbol STEM, listed here on the New York Stock Exchange. Stock closed $6.54 a share, up 38 cents, 6.17% on the day. Now, this was the long-term downward channel trumpet that we spoke about going back to the middle of September. And as you can see, the stock has not only broken out recently, but of course is approaching roughly that 670 mark, top trend line here of this trumpet. So chances are the company is going to calm down for a little bit here in the short term, but basically just wanted to make the video again to remind everyone just how awesome my calls have been. I did mention that there was a descending wedge lining up, which is a bullish pattern. We were just waiting for the breakout, and the apex incidentally lined up with the company reported earnings here on May 4th. And now I drew out the projection of what would happen to the stock here if the numbers came in light. However, of course, STEM, just basically being the phenomenal company that it is consistently increasing revenue quarter over quarter, year over year, which again, as I said to you guys, is basically the recipe for success if you're running a publicly traded company. Now, estimates have increased significantly, but the company still beat estimates. 62.708 million. Going back to this time last year, 28.922 million. Right? So what's that, like 120% increase in estimates? And the company came in and still beat, not by 42%. However, 7.5% coming in several million above analyst expectations. So the stock was rewarded not only on the descending wedge, but of course the growing revenue. And this move, believe it or not, all the way up from 370, 380, 390, up to 6, 6.25, 6.5 is 110% justified. We looked at the growth in revenue, we looked at the market cap at the time, and knew basically that the stock was undervalued in the numbers, and we just needed good revenue to come in, and shareholders would get rewarded. Now with the stock at 6.5, now the market cap is $1 billion. Now coming back here, we can see the company made $363 million last year in annual revenue. So now they're trading just about 3 times annual revenue, which is a little bit more realistic and logical, really, economical. Any way you want to look at it, it's more in line with where it should be, right? So this is more the real value of the stock here at 6.5, not down sub $4. So now what's going to happen is, because it's more in line and it hit this top trend line, or is about to, it will most likely pull back and sell off. And again, yeah, it could pull down into the high 5s here and just hug this top trumpet trend line going down here into next quarter's earnings. But when we hit August 9th, 91.812 million. If we go back to June of the year before, here it is, 56.78 million. Off of 67 million the company brought in, right? Phenomenal beat there, phenomenal growth in revenue. But 56.8 million about, now we're up to 91.81 million, right? So that's like a 50% increase, maybe a little bit more, 60% increase year over year for the quarter, right? And they brought in 66.94 million. So now the actual revenue reported also has to come in about 50% higher than where it was this time last year. And I'm telling you, with the way this company's been going, the trajectory of the growth here of this revenue, if they're estimating 91.81 million, this company comes in with like 97, 99, 102 million, any beat like that, and they are going to, in my opinion, break the stock out of this pattern and have it retest this all-time top trend line, if you guys recall. Now, we'll go back 1 year. Yeah. So, as you can see, again, broke up, really began trading, and has basically been in this long-term downward channel, right? It's not really like a descending wedge. If you just look at these orange lines here, this overall trend is just basically a downward channel that the stock has been bouncing into. Now, what we're seeing here is on this quarter, I mean, they could break it out, up into the 7s and stuff here in, the next couple of weeks or so. But basically, going into this quarter, if this company comes in and beats these revenue estimates, they will probably bring it up to this top overall downward channel trend line, which will be, as we see here, like the high 9s, potentially back to $10 where it was. And that won't really be uncharted waters, right? Because if we back it up here, you can see this stock was well above 10. Look at this, up at 16, 17, came from the 20s as high as the 30s. So bringing this stock up will not bring it out to uncharted waters, if you will, because the stock has been there before. However, if they break it out above this top trend line on this earnings report here in August, that is going to bring the technicals, that is going to bring the chart into uncharted waters. And that's when you can have serious breakouts. So this thing could get back to the top of this this downward channel here at around $10 and climb up to, like 10.5, 10.60, and then just have a pop and a breakout up to like 12.80, 13.50, and just start running a little bit. So only time will tell what's going on, but in my opinion, that's probably going to take place at that next earnings report there on August 9th. Switching over here to stock charts here on the daily. And you can see, this is why I love my Bollinger Bands, right? It's been holding that top Bollinger Band, rising off of that earnings report. Today, top Bollinger Band 663, stock hits 664 and rejects and closes at 654. The MACD has been absolutely raging and climbing basically for almost 2 months straight, so that's why I'm saying the stock could cool off a little bit. Here on the daily, I have it stretched out, so I'm looking at about 7 months here on this time frame, and you can see this is really, as of late, the only time in the last 7 months that the RSI has been really anywhere near this 70-plus level benchmark. But as of right now, you can see it hit that 70 benchmark and then dropped and sold off a little bit. Now we're back at that 70 benchmark, so we may potentially drop and sell off a little bit, kind of sausage out, consolidate, have people take some profits off the table. But of course, switching over here on the weekly, you can see we still have room to grow. The weekly RSI sitting here at about 47.5. Look at the MACD, of course, has recently crossed upward here. The stock, again, has been absolutely raging. But our mid-Bollinger Band here of 619, that sounds about right. So like I said, if it pops up here to like 670 and hits that top trumpet line we spoke about, and then kind of pulls back and sells off down to like 619, 610-ish kind of, and just bounces around there for a little bit, that would be justified before taking the next leg higher. But here, interestingly enough, our 50-day moving average, 971, right? Switch back over here to the daily. Our 200-day moving average on the daily of 950. And also, if we zoom in here, again, with this earnings report, and we come up here, you're looking at about, where are we? Yeah, like right here. And look, we're looking at 970, right? 980, 960s. So it's all going to line up inside of about the next 2 months when this company reports earnings. And that's why right now for STEM, the revenue is very, very key. But right here at about 6, 6.5, in my opinion, I think the stock is fair value. And it might not be a bad time to step in if you missed it or you weren't involved. But, again, the company basically just filled this gap and went on a pretty big run as of late. So if you get in here at 6.5 and then it pulls back to like 610 first, again, don't get too excited. Don't get too stressed out. If you have the liquidity, obviously add to the position. Like I always say, if we liked it at 6.5, we're going to love it at 610. So if you do get that opportunity, take it. If you don't have the liquidity to add to it, listen, don't beat yourself up. You're never going to get the high. You're never going to catch the low, right? Like we always say, just do your due diligence, do the best you can, and just make educated decisions moving forward, and be confident in yourself and your decisions. If you cross every T and dot every I, and you basically know in your heart of hearts that this is going to be a great investment, then go for it. And if it encounters some volatility or it pulls back before it climbs higher for you, just deal with it. Take it on the chin, move forward. Put your head down and just keep plowing. But STEM overall, I do like it. And again, we have multiple moving averages between like 950 and 970. And of course, we have our top overall channel line would be at around that 970 mark, right around the company post earnings. So, you could here in the short term have a potential little pop breakout for a little bit, and then it could pull back into this trumpet. But chances are it's probably just going to chill out for a little bit here in the short term. And really, whether it drops down into the 5s or breaks up into the 7s, it's not going to matter because the direction is really going to be determined on August 9th when these numbers come out. But just wanted to do a quick update video to remind you guys that I am so damn awesome. And this is what happens when you actually have not only experience as a trader, experience as an investor, but more importantly, actual experience in the finance industry. That is what I feel separates me from the rest of these quote-unquote YouTube stock hobbyists that are now out making their channels. And notice a lot of it happened during COVID and stuff, right? The market started to pop and drop like crazy. A lot of people were making money. A lot of people were probably getting smacked up in the last couple of years. So what are they doing while their portfolio is on ice and they have no idea what to buy or what to trade or how to read the market? What are they doing? They're basically making useless list videos or showing you one or two positions that they're holding, like, I don't know, to try to like get you in their position or to show you that they actually have a stock. Like, I really don't understand the point of these videos, but I just want to tell you right now, if you're not really absorbing any knowledge from these YouTubers that you're watching, getting any real sense of direction of the market or stocks you're interested in, you know, if you're not growing overall, then, you know, do yourself a favor and just move on from these people, these hobbyists on YouTube who are just polluting, you know, financiers and traders with these useless videos. Time management, focus in the right places. That's basically what I'm telling you. Focus in the right places. Because again, at the end of the day, we're here to make money. And been making some pretty decent calls lately. So if you haven't subscribed to the channel, sub up. Always like to see my community grow. Like the video, thumbs up, helps out the algorithm, helps me get more eyes on the channel. Basically, moving forward here, as I mentioned in previous videos, talking about the administration, now we're under Biden, and it's basically echoing exactly what happened under Obama. And what that is kind of an uncertain, volatile market that doesn't really make sense. And as we're seeing here, with economic data coming out negative, they're like spinning it positive, and markets keep climbing, and none of it makes sense at all. And the lone star of the market is the tech sector, just like it was under Obama. I remember not much happened under Obama. The markets were kind of relatively flat coming out of that 08-09 big drop. And they basically kind of flattened out. And it was kind of like the same thing. It was like industrial stocks. Whoa. Random Google help. No, I don't need your help. It was like industrial stocks, material stocks. They were kind of flat. They were kind of getting beat up. And the only stocks that were really getting rewarded were the tech stocks. So again, I understand it might be very simple to just buy a tech stock and just hope and pray that they keep getting rewarded and you make a couple of bucks. But at the end of the day, we have a lot of cheap, beaten up stocks that are still doing very, very well on paper. And the stocks now in the prices are starting to reflect that for us. If we look at our Rolls Royces, if we look at our Soundhounds, if we look at our Stems, right? These are all our Fubos. Just did a video on Fubo. Stock went from low $1, now it's at low $2, right? So these stocks are moving significantly, 40, 50+% returns for you guys that we've been looking at. And it's all happened just inside of the last couple of months. So, you know, again, is it the potential 1,200% return you can get on some call, on some meme stock, just hoping and praying that the day comes that it pops and breaks out? Or you can do a little bit of research, right? Do a little bit of homework, and all of a sudden now you have this arsenal of a watch list of 10, 15, 20 cheap stocks that are massively undervalued in the numbers that you know anytime you see a big dip, you can step in and go long because you know basically that it's supposed to be higher than where it is right now. But I'm going off on a tangent. I talked enough. So, stocks by the numbers. Thanks for stopping by. Like the video. Subscribe to the channel. I'm going to go make another video. Have a nice day.